Everybody see that? Oh, fun. All right. We're going to try and make this thing interactive and fun. Finance is fun. I've certainly come to find it to be more fun. It's more fun for me, especially because I don't do it, because I'm not good at it. But I am running this webinar. How's that possible? I don't know, but I am. So I'm going to go into it. First of all, thank you for coming. We got a lot of clients here. We got a lot of people I haven't met. And I'm going to dive right in. We're going to be sensitive to your time. If you can stay on video, it'd be appreciated. It's a pandemic and we like to be around people. So this is the best we have right now. So hopefully you can stay on video, participate, ask questions. This is all for you. We're going to run it quick. I'm trying to have fun with it. I actually do love all this stuff. You're going to see that. I've come to really appreciate finance, but I do not have a finance background. So if you're sitting there thinking, I don't have a finance background, this stuff scares me. Well, it scares me too, but I've really come to learn a lot about it. And I'm going to tell you how I've done that. And I'm going to give you some of my background and really show you what we think you really need to have. So let's go ahead and get rolling. Once again, you have questions that say, Eric, got a question, stop me. You'll notice this is what the title of this is what a great finance function looks like. Okay, so we work with close to 60 companies, and we work with them in all phases. We work with them from $1 million companies, $2 million companies, up to about $400 million companies. And one of our philosophies is we accept clients and take clients and appreciate clients for where they are. So if you're sitting there and you look at this webinar and you're like, how the hell am I going to do all that? I am nowhere near that right now. No problem. I wasn't anywhere near this with our companies, 10 years ago. And we've come a long way. It takes time. So try and get some nuggets out of this. We are a help first company. We certainly do this for a living, and we'll help you do all this stuff, but we'll also help you with this stuff as much as we can for no charge. So just reach out to us and we'll help answer your questions. So when we say this is what a great finance function looks like, that's why it's in italics. We don't want you to get stressed out. We want you to learn and kind of have a vision for what we think the ideal does look like. So let's dive in. Our firm, we're Cruise Consulting Group. Our why is to help entrepreneurs and their teams live their ideal lives. That's really it. And we do that by trying to knock out three things for our companies. We are linearly focused on helping companies improve and increase their revenue, increase their profitability, mostly net, but we do it through gross profit, and increase the overall value of the business. So our focus really is, and we've had a lot of internal discussions around this. We want you to have an ideal life. We really try and focus on your financial health of your business and making sure your companies grow and scale so that you can have that great life and your teams can have great lives as your company grows. Our what? We are a consulting business, like I just said. That's what we focus on, our target market. We are one of the few consulting companies out there that truly specializes in small to medium-sized businesses. That we have very few competitors. Probably because nobody else is crazy enough to do this, but this has been my whole life. So we love it, but we specialize in companies that are really $1 million to $2 million, up to really the top end for us is really when you get in your $300-400 million range. And that's really up into the larger businesses. But we really kind of stick in that small to medium-sized businesses. If you're a small business, we're going to try and help you become a medium-sized business. If you're a medium-sized business, we're going to try and help you become a large business. We're always trying to help companies get to the next level. So we do that through a proven process that we run in the consulting business. And I just want to this kind of gives you a context of how this all fits in. We start by, usually with clients, we help them install a business operating system. We have a tremendous amount of experience with EOS. A lot of you are doing EOS, or you've heard about EOS. We have probably 800 or 900 combined experience days of EOS under our belts as a firm. And we also have an operating system that we call Growth that we've built. And Growth brings together all the fundamentals of EOS. So you get all those great foundational things that you need to grow a business. And then we also throw in a lot of strategy and a lot of finance that we think you really need as you continue to scale your business beyond operations. So we do an operating system. We help the companies out with recruiting and finance, strategy, sales, marketing, technology, professional development, really goes all the way through to wealth management, M&A. And Mohammed Marola, one of our wealth manager partners, is on here. And is Derek here? If Derek was here, he'd already be screaming. He can't stand the fact that wealth management is at the end. Justin, represent your firm. He hates this.
Derek. Yeah, Derek is in another meeting right now.
Yeah, he can't stand it. So yes, if you don't have a wealth management person in your firm or in your life, you should be doing that already. We put it towards the end just for visual. And ultimately, we help a lot of companies exit as well. And, not that companies always want to exit, but we are very passionate about measuring the value of the companies we work with to help them increase the value, whether they pass it on to their kids or their team members or they sell it. So our first poll. Oh, this is way beyond my skill set. Are you running this, Karina? Good, because I don't know how to do it. So poll number 1. How confident are you with your current finance function? Option 1, you are very confident. You understand your numbers and you always have the information you need. You can always access the information you need. Number 2, you are somewhat confident. I understand the basics, but I don't use my numbers to inform business strategy. You know it, but you're not using it to inform business strategy. Number 3, you are not confident. You have no idea if you're on track with your targets. You just have no idea, period. That's about what I figured. Okay, so we got about 18%, very confident, 20%, 19%. It's starting to drop. I don't even know that's possible with these polls. It was 20, it went to 18. Confidence is waning. 71% are somewhat confident, and 10% are praying that there's still money. There's still now that's dropping. Your confidence is going up. 9% of you think if we have checks in the checkbook, we must have cash. All right, awesome. I actually probably was at somewhere in the not confident to somewhat confident range until about 10 years ago. All right, I'll take that rid of that. So I'm going to give you a little bit of background here about me, and I'm going to introduce Miguel here. So some background about me for those of you that don't know me. I am a lifetime entrepreneur. I've been an entrepreneur really since I was in my 20s. And entrepreneurship is a big part of who I am. I absolutely love entrepreneurs, and I started as I own a company called Collegiate Entrepreneurs. If you've heard of Collegiate Entrepreneurs Painting, I've owned that company for many years. In fact, we're getting ready to have a transaction on that. I've sold it to a longtime employee of mine. After owning it for 20 years, we've had almost, I think, 12,000 employees during that time frame, and done tens and tens of millions of dollars of business. So a lot of finance there. I also still currently own, with a partner, a company called CE Painting, which does large commercial projects. It's a fast growing, basically a project management company that works for large GCs. We do big buildings. It's a great business. And I have the consulting business. I started the consulting business, honestly, because I was a member of the Entrepreneurs Organization, as many of you in this room are. And I was asked to be a volunteer for companies that were smaller and trying to help them, mentor them to grow them over the $1 million range. So I was a volunteer for years, and I loved working with the companies and teaching them the stuff that I had learned. And then eventually that led me into doing some paid coaching 8 or 9 years ago. And then that got me to getting to doing EOS stuff, as a lot of you know me for doing EOS stuff. And then we started to bring other people on, and the client base grew. And then finally, I just said, we really got to start helping companies out. We started to get really ingrained in the rest of the business. And then a couple of years ago, we rebranded as a consulting company. And now we help companies from soup to nuts. But I still do own the other companies. And when I leave here today, I will have meetings this afternoon for my general service businesses, just like all of you. I live this life. I am an entrepreneur. Yes, we have a consulting company. Yes, we work with a lot of companies. But I honestly probably identify myself more as an entrepreneur than I do as a consultant. But we love working with the businesses. So my issues, and where I've been, I don't know where all of you have been, but we have certainly run a large companies, and we've run a lot of employees. I've had years that we've done extremely well profitability wise, and I had a year once where I lost, I think, $1.5 million in a year. I've had situations where we've had very strong cash. And then, of course, that leads to a lot of other confidence things, all that kind of stuff. And I've had years when we've had extremely bad cash, when I've stared at it and said, I don't know how we're going to get through this. I've lived that journey. And it's been very scary, painful, honestly. It's taken probably years off my life. But I would never want to be anything other than entrepreneur. It's who I am. And that's one of the reasons I love what I do so much, is I get to work with all of you. So whether you work with an entrepreneurial firm and you're on a leadership team, or whether you're an entrepreneur yourself, you're really my team. So it's been quite a life that I've had and led. And really, we built a consulting firm because I'm trying to help as many companies as I can, as we can as a team, to learn from the things that we've done really well and to learn from the things that we've done not so well. I will tell you that what I'm going to present to you is a system we built over years that's helped me capture all the things that we have done well. And it comes from a lot of the learnings I've done in the first, I just turned 50, probably started nailing this stuff when I got into my early 40s. And honestly, the reason I started to nail this stuff is because I hired a really strong controller. That was one of the reasons. And he helped me to learn what I didn't know. So that's kind of my background. So we're trying to help you today to get your function in your house in order so that you can, one, understand your numbers. Two, know what financial levers you have and when to pull them. Three, be able to make smart strategic decisions based on financial data and forecasting. And four, improve and increase cash flow and also profitability. So I said earlier, we start with an operating system in a lot of our clients, whether it's EOS or our growth system or whatever we're doing. A lot of clients these days, we have a separate finance organization. So I'm really representing the separate finance organization that our company has. So we have companies that use us just for finance. So I'm just going to stick to that. But I will say that if we're a consultant and we're running your quarterly meetings and we're trying to help you grow, I can't even work with companies anymore unless you're doing the majority of this. I can't do it because I can't. To me, when you guys grow your companies, and when I work with a company, when our team works with companies, we're trying to help you to increase your numbers and we're trying to help you to get your cash strong. So all this strategy you have, what I find, and I work with a lot of companies, is I say, where's this going to get you? And the answer is, I don't know, bigger. Why? Because. And I'll look at it and say, I grew big too once, and I lost millions of dollars. And they say, well, how are you doing? And usually the answer is, I think we're doing well. And how do you know that? And usually the answer is, I don't know. I'll share an experience that it's been shocking to me. And I don't get shocked too much. I've seen a lot. We started this finance company specifically as a service a little over 2 years ago. And almost, if you know me, I'm a help first person, and if people buy from us, they do, and if they don't, they don't. Every time we go into a company and analyze their cash, their finance situation for a small, medium-sized business, it's usually horrible, and it's shocking. And it's funny when I say that out loud. I don't know why I'm shocked. If somebody had come into my finance operation 10 years ago, it would have been a complete disaster. I wouldn't even let you come, and I'd be too humiliated, honestly. So that's where I was. So I shouldn't be shocked, but a lot of you are running your business and you just don't have the right stuff. So we want to make sure you nail it. So what I'm about to go through, there's 9 things that we have in our process. It's only 9, and you can do a whole lot more if you want. We have a great team of people. I work with CFOs, and you can do all that stuff, but we have down to 9 things you have to do. So I'm going to start going through what those things are. So as you probably know, inadequate cash flow is the #1 reason companies do close their doors. So we want to make sure, you probably heard the expression, if you haven't, memorize it. Cash is king. Revenue is, have you heard this expression? Cash is king, revenue is vanity. Don't ever forget that one. That one's taken years off my life too. And profit is sanity. Cash is king, revenue is vanity, and profit is sanity. If you want to focus on something in your business, focus on profit. If you want to make sure you're going to survive, make sure you have cash. Honest and open and honest experience, our commercial business is killing it. We think we hit like 530 or 540 on the Inc. 5000 last year. We have no cash. We are growing so fast, and our receivables are set up in such a way we never have cash. That sounds crazy, right? If you saw our numbers, you're like, how's that possible? Well, when this pandemic's over, sit down, we can have a drink, and I can tell you all about how it's possible. But when your company, it's all numbers. When your company is accelerating at a certain rate and your receivables are at a certain rate, you don't have cash. So we have a company that makes a significant amount of profitability and doesn't have enough cash. So then you got to solve that problem. So when we say cash is #1, profit will make you, it'll help improve your balance sheet, but it'll kill you if you can't finance it. Okay, it'll kill you. So you want to make sure you always nail profit, cash. Cash is king. But I do want, a lot of consultants use cliche shit, and we do too. So it's a nice little cliche thing to keep in mind. Cash is king, where revenue is vanity, profit is vanity. But remember something at the same time. If you're not making profitability, cash may be king, but you won't be king for very long. Okay, so make sure you have cash. Make sure you make profitability underneath. All right, let's jump into the proven process. Now I'll go back one slide. Quick agenda, our proven process. We're going to tell you what your finance team should look like. It varies for every company. Some companies just bookkeeper, some companies just controller, some companies CFO, some companies a combination, some companies just the owner. Okay, no problem, whatever it needs to be. We're just going to tell you what that looks like. And then we'll have Q&A at the end. We are going to have a hard stop at 10:30, I promise. Our proven process is 9 things. Are we going to have this deck available, Karina? Or how are we going to share the deck? What are we going to do?
We're going to share a call recording, and then we'll share like a one pager with these tools on them.
Okay, awesome. And we'll get you our email address at the end. We'll put in charge of somebody in the finance team if you want, or you have questions. So 1, you have to have a 1 year. I'm going to dive through each one of these things. So we have to have a 1 year budget. You have to have a 1 year budget. And I'm tempted to, I get excited about this. So I'm not going to dive into each one of these right now because I'm about to do it in a minute. 1 year budget. You have to have a 3 year budget. You have to. You're probably sitting there like, what do I need a 3 year budget for? You probably have a 3 year vision. If you don't have a 3 year vision, you don't have a 3 year budget. I don't know what you're going to do with your vision. I can't tell you how many companies I work with, and I say, what's your plan? Huge in 3 years. What's your plan to get there? I don't know. So you got to have a 3 year budget. You got to do monthly closes, open and honest. You can be open and honest. Who here closes your books on a monthly basis? Raise your hand. Open and honest, monthly close. That's not bad. Aha, there's hope. 4, you have to have a monthly profit and loss statement. You have to do monthly cash flow, forecast monthly budget, forecast and actuals, a rolling 12, and you have to have some kind of monthly finance meeting, even if it's with yourself. You have to do it. Now you may look at that and like, oh my God, I'm never gonna be able to get all that done. It's like 5 forms. That's it. It's 5 forms. We can even get you some basic, we get you the forms. It's like 5 forms. That's it. It's very simple. Well, yes, it's very simple. It's not easy, but it's simple. You need like 5 forms. So I'm gonna dive into what those things are, but that's a general snapshot. And we have high power CFOs that are amazing, do all the kind of great stuff, and they hate it when I oversimplify their jobs. Can't blame them. These are the 9 things that you need. That's it. Until you hit about 30, 40 million. And then you need some more analytics. But before that, you need those 9 things. Let's dive into what those things are. 1, you need a 1 year budget, okay? A budget is your prediction of how the company is going to perform over a given period of time. The budget itself remains fixed for the entire year. You use it to set sales targets, identify a necessary overhead plan for key hires, and find blind spots in your business model. Your budget should be set up to easily show gross profit. Now, if you're a client of our finance company and you're in here, please keep us honest. If you're not getting any of these 9 things, let us know. It's possible, depending on where you are in the journey, that you might not be, but just let us know, okay? So a budget. If you're, get some people in the chat here, because I'm sharing my screen. Green, if you want to watch the chat and see if we have questions. If you have questions, feel free to go on off mute and just shout out loud. So I'm going to show you what a budget looks like here in a second. But a budget, here's some quick tips on budgeting. Most companies, if your fiscal year is December 31st, are doing budgeting and finishing the budgeting process by November, December-ish. October is ideal, but November, December-ish, you want to be finished your budgeting process, okay? A budget is a fixed document. If you want to change your budget, you can. I wouldn't recommend changing it past Q1 of a given year. So if you are going to go, if you're doing quarterly meetings or some kind of quarterly rhythm, you can change your budget after Q1, but not after that. Unless it's a pandemic, we spend a lot of time helping companies change their budget in the pandemic, but unless there's some big thing, ride your budget out past Q1. It's a fixed document. It's meant to keep you honest. And here's an example of just a standard budget. Now, I'm going to say that another big tip here, if you're not already doing this, is that this is really where I screwed it up big time. You have to make sure that all of this links to your accounting platform, whether it's QuickBooks or whether it's whatever your system is. This all needs to link. So set up your chart of accounts so that it links and matches up to whatever your budget is. It's one of the big mistakes that people make. That way it all links. And when we do these forms for clients, we do the form linking all their platform right into our documents. That way it's not like manual entries. We make sure it all links. Otherwise you get a lot of discrepancies and issues. So you don't want to do that. You want to make sure it all links so that you have 100% honesty in what you're looking at. So you need an annual budget. It's projected income expenses for the year, broken out by month. Pretty simple. It shows if you look at this thing here, it shows your revenue at the top. It's called above the line, and below the line, it shows your expenses. If I was to scroll down through this thing, it shows your gross profit as well. Quick tip around gross profit. We talk a lot about net profit. My coach taught me something extremely valuable once. He said, remember, Eric, the biggest way to increase net profit is to be obsessive about your gross profit. You must be obsessive about your gross profit. Everybody's always trying to cut expenses. You can strangle a business by cutting expenses. You need to make sure your gross profit is defined and that you're hitting that number. It's crucial if you're going to try and grow your company. So your budget will help you figure out what that gross profit number should be. Any questions about budgeting at all? Pretty basic stuff. Who here's got a budget? You got a budget, fixed budget for the year? Raise your hand. Some of you do. All right, good. Good. Clients, thank God. All right.
Eric, question in the chat. Mahendra's asking, how do you predict sales?
Oh, well, we have crystal balls that we have. If you're a client, you can shake, and a magic 8 ball sometimes works even better. Kidding aside, so the quick answer is you have no choice. So, this is one of the things that we try and teach. And it's funny, we actually say that one of our guidelines for being a strong executive is you have to kind of have your own crystal ball, and you have to own that. So we do it by meeting with our sales teams. We do it by meeting with our leadership team. If you're a small business, you want to look at what you think you're going to do. And then for a budget, I would cut it. So I always cut it. Look at your budget, your sales projection, and say, I think we're going to do this. Entrepreneurs are overly optimistic. Take your forecast for your budgeting purposes. Your budget is your bank. So predict what you think you're going to do and cut it. Maybe 25% in a lot of cases. And that'll keep you honest. You can always beat your budget, but if you run out of money, you're going to have a problem. So I'd work with your sales team. Don't listen to them usually, but at least take their input. I work with your leadership team. And then if it's just you, take a very conservative budget. I will tell you also, and I'm not going to talk about it today, but we are obsessive about looking at year-over-year numbers. Obsessive. So one of the biggest things I look at is our numbers this month, how are our numbers this month compared to last year? And I keep my numbers from last year next to me almost at all times. It helps me do year-over-year growth. Year-over-year growth is a big way to predict. Great question. All right, someone's got some business going on there. Your picture of the future, your 3-year budget. So I used to be less passionate about this, but if you're a scaling business, you got to do this sooner than later. So all this really is, I don't have an example of one of these. If you email us, we'll try to, it's tough to share some of this stuff because we have all this. And like, if you email us and want to do a meeting with us, I'll share you all of our tools in real time so you can see them. Just email us. We can't share all that stuff on the screen. Or my whole company would get pissed at me if I did that. But the 3-year budget is basically this, taken out 3 years. Okay. Now in that 3-year budget, you want to make sure you put in there your key levers that you need to grow your business. That's your key hires, any revenue streams you're planning on adding, and your projected growth, and your capital spending should be in there. It's a roadmap for helping you set and achieve longer term financial targets. So when we work with a company, you know, and this has been an evolution for me, this whole thing. We're really trying to help them hit their 3-year vision. The 1-year goals are really just a set of to-dos. 1 year is like a blip on the screen. So we want to make sure if a company says we're trying to double in 3 years, I want you to know how you're going to do that. So or you won't get there. A lot of companies don't get to their beyond their 1 year because they have no idea what 3 years looks like. So we just say, take your 1 year, take it out 2 more years, and do it by month. And where at the bottom, add in, or somewhere in it, whatever is easiest for you, add in the key hires you need to do it. So people say, well, I need a sales manager. When do you need that sales manager? Or I need to add another location. When? How much is that going to cost you? And then map your revenue right against it. And, you know, extra credit, if you can do it, and we have this, and I'll show you this too if you email me. We have our 3-year budget mapped against 3-year cash flow. And that'll really help you accelerate. I cannot tell you how many companies that show this is my 3-year budget. And I say, great, you're 2 million short on cash flow to do that. So you want to have extra credit, you take this 3-year budget, you build this sucker out over 3 years, you put in your key strategic expenses. Now, of course, as you're listening there, I'm sure you're realizing this forces you also to plan your growth, which is what's exciting about it. So it forces you to say, how the hell are we actually going to grow? And what it often does is it makes you realize I don't have a strategy for growth. And this 3-year budgeting exercise really forces you to think about what that's going to look like. And then once you come up with the answers, then you plug in what you think some of those strategic expenses are going to be. Any company we work with that's scaling to, you know, the bigger businesses all have this. This is how they run their companies. 3-year budget's a given for them. I want small businesses to have the same thing. There's no reason you should be excluded from that party. So this does that. Then you map your cash flow for 3 years in there. I spent a big chunk of my business life staring at bottom cash flow numbers just to make sure there aren't reds in the next 12 to 36 months. And if I can look at 12, 24 months out and see reds at the bottom, I just know I got to solve that gap. If I see a $300,000 gap, that's a year and a half out, but I can see the profitability increasing. It's exciting. So I can say, all right, I got to solve a $300,000 problem and figure out what financing we need. Banks, by the way, absolutely love this stuff. Banks love this stuff. You go in there with a bank and this stuff, they just say, all right, great. We see it all. Your odds of getting your financing are going to go way up. Once again, you want to see what some of this looks like in real life, just email me and we'll take you through our numbers. We're very open about our stuff. Poll number 2, how often do you get financial reporting? Karina, where's Karina? Is she here? Please tell me Karina's still here. Karina, you're going to launch the poll?
I'm here.
All right. Launch the poll. Monthly, quarterly, annually? Never. How often do you get financial reporting? Oh, monthly's looking good. Monthly's coming in hot. Quarterly's coming in right behind it. Annually's back in there. Annuals in the annuals. 77% monthly. Good. Never. Thank goodness. We have either. Of course, we only have 22 people participating in the poll right now, so the nevers are probably the rest of them. All right. Awesome. That's good. Monthly's good. Good. 77% said monthly. Monthly, quarterly, annually, never. I will tell you, as crazy as it sounds, I'll go over in a second. I'll keep going. We're going to go to just the monthly close, okay? I'll tell you, I will say this. As crazy as it sounds, our cash flow for our 3 businesses are mapped out on one macro document that is updated weekly. We have 150 weeks mapped out on a cash flow document we look at every single week. Why? Honestly, I do a lot of this stuff because it's freaking fun. It's fun. It's fun to look at it. If your numbers are getting updated and you have the ability to do it and you're getting cash receipts on a weekly basis, you can look at your business go up. All we're trying to do is gamify all this stuff. But no matter what, you got to do monthly, and you got to close the books. I didn't close my financial books, officially closed financial books, probably until 10 years ago. I had closed books every year. And I know some of you do not close your books every year because you are our clients. We go into the companies and we close books. We're closing books that are 2 years out and trying to fix that. And there's nothing wrong with that because I was the same exact way. But you can't generate real reporting if you don't close your books. You can't do it. It's tedious. I know it's tedious talking about debits and credits, but they are the foundation for all the analysis and insight that ties to larger strategic goals. We reconcile credit card and bank accounts. What's in your accounting system matches those accounts. What's included this month versus next month. Think open invoices. That's all got to be done monthly. So I'll take a minute. Miguel's going to be here to answer some questions here at the end. I know he's having some internet issues. Miguel, are you there?
I'm here, Eric.
Okay, you're there.
Mm-hmm.
So I'll introduce Miguel at the end for some questions. But Miguel, if he's working in your business, he's our controller. He's got a tremendous amount of experience working with franchises and large operations and small operations. This is one of the first things that he does is make sure we have good monthly closes because this is the base. So if you're sitting there thinking, where do I start? Start with a monthly close. It's not that hard. You need help? We'll help you. And then you get into a monthly profit and loss. And I'll show you what that looks like in a second. This is the fundamental entrepreneur's report. Almost no company we work with actually does it. Surprising. It shows you on a monthly basis how your company performed that month. It doesn't tell you about cash on hand or liabilities. It doesn't tell you if you hit your sales targets. Well, it actually does tell you that. But it's really showing you profit and loss. You can kind of show, you can look at sales target. Well, it doesn't show sales, it'll show revenue. And it identifies unnecessary expenses or unexpected revenue gaps. Let's take a look what that looks like. This keeps you honest. When we go into a company that's hemorrhaging cash, where the profitability is 10 points lower than it should be, which is often, this is the first place that I start. It's kind of like saying, look, if we're going to try and fix this, we got to first rub our nose once a month into what actually reality is. Diving into reality is one of the best ways to get financial strength. I learned this lesson. I'll show you exactly how we do it. Monthly cash flow, same thing. It's your company's lifeline. Reported profit, remember this. You heard my story about our commercial business. Reported profit does not equal cash in the bank. Monthly cash flow is a projection of liquidity to make payroll, pay vendors, rent, etc. Can identify need for improvements, shorter AR, shorter project schedule, restructure payment terms. I've said it before, in the earlier, I'll say it again. You have got to be watching cash flow monthly. Some of you need to be watching cash flow weekly. You need to. Do not confuse cash flow with reporting. And here's a typical cash flow document. This is cash going in, cash going out. It's the same, looks very similar to the P&L. And on the bottom, we run the balance. So we are big believers in running balances because we try and gamify all this. A lot of what you're seeing here, we create the simplest possible way we can do it. Our finance proven processes are designed for me. They're not designed for people that actually know a lot about finance. So everything we do in our proven process is about having somebody like me and all of you run your business because you're not usually finance people. So we take, you want your finance team to create reports that are easy for you to use. When we go work with a company, one of the biggest issues I help them to solve is a lot of times I'll have a smart CFO or a smart controller, but they don't interface well with the owner. And the owner's like, what does all that mean? And what I try and tell you is, look, I'll tell you what it means. It tells you that here's your cash balance at the bottom. And I look at the monthly forecast and I say, it tells us we need to increase sales here and here. It tells you got a cash gap down here for the following months. And that's all you need to know. That's it. The rest of this stuff, is it valuable? Absolutely. But these blocks at the bottom, that's what you need to be watching. And I can't tell you how many cash reports I see where it's like, here's the cash report, here's the monthly, and there's no running tally. And I'm like, what do you do with that? You know, every week you're red. We need to see a running tally. I need to see how we're doing on the game on a constant basis. Monthly forecast. Your monthly forecast is a P&L based on your most recent assumptions. We have some examples of this coming up. A P&L based on your most recent assumptions. Put your P&L data in context with your projections for the entire year. It's your most fluid report. I'm going to show you what this looks like. I see very few companies that ever do this, ever. I will tell you, we've never gone into a company we work with that ever does what I'm about to show you, ever. And this was my biggest aha, what I'm about to show you. And I'm so thankful for my controller, Charles, who works with some of our clients. I'm so thankful that he introduced me this tool. I'm sure he's waiting for royalty checks any minute, but he used it as last company. It's phenomenal. It's a phenomenal report. that really helped me have fun with finance. So the report I'm going to show you in a second, it puts P&L data in context with your projections for the entire year. It's fluid, it's updated monthly based on new assumptions, information. The format is, you're not going to understand any of that, but I'll show you what it looks like here. All right, so here we go. So my company's run, this is the biggest thing I care about of everything I've showed that you've seen so far, okay? And once again, you want to see what ours look like in real time, just email me and I'll share the screen and we'll go through them all with you. This is a typical example though of what we call a 9 and 3 or a 1 and 11 or a 2 and 10, depending on what month it is. This is our forecast that's updated monthly. So in January, when you close January, this report's called the 1 and 11. Why? Because it shows you how you did in 1 month, and it shows you what the next 11 months look like that you have left to hit your annual goals. February, the report's called a 2 and 10, because you know you've got 2 months down. What entrepreneurs don't take into consideration is that as they go into the year, this is why Q1 and Q2, if you read our blogs, Q1 and Q2 are so important for a business because you're setting your foundation for being able to hit your targets. So what this is basically saying is every month's important, and we want to look at every month as being a game. So we look at, in our companies, we look at every single month. We forecast at the beginning of the year. This does link to our budget, but this is the forecast, and this does change monthly. Our forecasts will go up 50 to 100 grand in some months based on how us changing what we think the reality is going to be for the year. So you'll notice we have standard income up here. This all comes from QuickBooks. For us, we still use QuickBooks. QuickBooks is easy. I know a lot of companies use proprietary stuff. I have too. We go to QuickBooks. I try and keep companies with QuickBooks as long as I can because it's so intuitive. This shows you can see all the expenses. This links to the P&L, and it shows you on a given month. It shows us in this company in month 1 lost $45,000. It shows us they had a net profit negative 23%, and shows us that our year-to-date net profit is negative 45. So if this is the 1 and 11, it would show that. Now this is the 9 and 3. So for this company, 9 months of the year are over, and I can look at this and say, so far I've made net income of negative 62.5. It shows me where the months I've lost. So this is frozen in time. So when we work with companies that they're saying, well, I'm trying to hit 10 million this year in revenue, and I'm trying to make $1.5 million in net profit. So I'll say, great, let's look at the books right now, and let's look at the remainder of your forecast. And what that allows us to do is say, can we tweak up the rest of the year to hit our numbers? So in our companies, if I look at this, if I get this thing, I get this every month. If I get this thing from our controller, I can look at it and say, what the heck? Our budget has us doing 10 million this year and doing this, and our new projections are now showing we're going to do 8 million and we're only going to make 800,000. What the heck happened? And then I can go to the team and say, guys, we're off. We're behind. Our new forecast is this. And every month we change it. It's not hard to change it. I'll show you how we do it in just a minute. But this gamifies the entire making money function on an annual basis for us. It gamifies it. And it makes it a shitload of fun. And I can understand it. I can look as an entrepreneur and say, oh, I get that. I'm not making enough money. I can figure that out. And then I can dive into and see how. And, with my leadership teams that I work with in my own companies, we know these numbers like the back of our hand. We know in a given month, we're trying to do $500,000 in revenue. We know we're trying to make 60 grand off of that. And then that's our game. That's our month. And then we get our scorecard. Did we win that game or did we lose it? And we get that every month, and it links to QuickBooks. And it's like the heavens open up. Some months that actually the hell opens up and I look at it, but hopefully the heavens open up. And I see this thing and I'm like, I know how I'm doing. And this is why you see those blogs. Once again, we're telling you, we want you to crush the first quarter. You start getting behind, this becomes the 6 and 6. You're running out of runway now. You've only got 6 months left. So we want to make sure this keeps you honest. Every month is a game. So the gray are the closed months with the actual amounts, and the white are the forecasted months. The gray is how we're doing so far in the game. The white are the innings we've got left to win the game. Biggest forum. I'm so thankful to Charles for introducing this. He came from a large firm, and he said, I said, Charles, I still tell him, like, Charles, this is freaking amazing. It's been life-changing for us. He's like, whatever, it's because you're a stupid finance moron. You don't get it. And I'm like, okay, I'll take that. But it's been life-changing for us. So it's designed to compare your actual performance to your most recent forecast and to your original budget. So once again, this is not your budget. Your budget is designed to keep you honest. Your forecast is basically, the budget is the game, is our predictions for the game for the year, which we can change really once a year. Our forecast is, how are we doing in the game? How are we doing? So the budget can get updated monthly also. It's really a static document. It allows you to keep yourself honest. What the heck were we originally thinking? Well, we were originally thinking we're going to be doing this. How are we so far off? Well, because our budget shows we're trying to do this. So the budget keeps you honest. The forecast keeps you in reality. So the forecast drills down to monthly performance, how it's going to affect quarterly annual projections, improves the ability to use your crystal ball and make smarter projections. You do need that crystal ball. Example, you assume 3 clients per quarter, but really it was 2, or you assume 10K per engagement, really it was 5. How does that affect your numbers? In the finance business right now, if we don't close, and I know a lot of you have a similar circumstance, if we don't close X number of finance clients in Q1 and Q2, we have a monthly charge. We can't make that up. So we are very aware of that in the first 6 months of the year. So right now, and I work with my team on that, and we're like, how many clients are, we'll get so far behind, and they'll say, well, we just need to sell this many clients. And I say, yeah, that's not going to work. Change the forecast. We've already missed a big chunk of our monthly recurring revenue opportunities. So this keeps you honest and keeps it fun. And then here's your monthly reporting, which I talked about just a few minutes ago. This is your monthly report. Like I said, I told you when we go work with companies and they're struggling and they're not making the profit they want to make, or they're not hitting their projections for whatever reason, I say the first thing we need to do is you need to close your books out. The second thing we need to do is we're going to schedule a meeting for the 15th of the month. The key stakeholders are going to be there. Usually it's the finance person, the entrepreneur, often myself, maybe one of the key players in the team. And I said, we're going to look at every single number in your business. And this is what we do. And we have a three column form for each month. And it's as simple as what you see here. What was the actual for September? What was the forecast for September? What was the actual? And what's the delta? This company is struggling. This company needs help. This company is trying to do 213. They did 175. They got a revenue problem, 39 grand delta. This company was trying to forecast 74% in GP. They hit 90. That's interesting. Oh, because they spend less money on labor. Their labor percentage dropped. But they fixed their GP, but their revenue crushed them. Revenue is one of the biggest crushers. Although revenue is vanity, because if you just focus on revenue, you're screwed. If usually when you're losing money, if you've already fixed expenses, revenue is the next killer. Revenue, GP, and expenses are the 3 killers. GP is the model itself. You got to fix that. Revenue is the next killer. In this company's case, you miss your revenue forecast by $40,000, 20%. You can't, like, say they mixed it by 16. That's why 20% of it's because of revenue. They picked up some expenses. So this is a typical company. They say, well, we save money expenses. Well, that's nice. You missed your revenue target by $40,000. Like, you're not fixing that. Okay. So you got to be careful here. So you can see all the reds, and every month we sit down with clients, and you guys should do this. It's not hard. Sit down with the key stakeholders. Every line, what's red, what's green or black, and what do we need to do? You write down a to-do list. Let's revisit insurance. Let's revisit labor. Let's revisit travel. And then you leave with a to-do list, and profitability just goes up. And it's the truth. This is the number one Band-Aid we use to help companies fix profitability. Grow the business and grow profitability long-term. Forecast, fix it short-term, this one. The rolling 12. So our forecast that you saw, that 9 and 3 or the 10 and 2, we extend that out to be a rolling 12, because you can't just look at this the year. So we just take that thing. Once again, this is all very simple. It sounds like a lot. It's not. We take that forecast and we always just make sure that right next to the end of that year, we have another X number of months to make sure we have 12 months total. We are always looking at 12-month gaps, 12-month things in our forecast. It gives us a baseline of finances from 1 year into the future. It always keeps us looking ahead, and it comes from the 3-year budget, okay? And that's why you need one of those. I can't tell you how many companies you work with. They're like, well, we have the annual down. I say, well, that's nice, but it's a 3-year journey. You're trying to hit your 3-year vision. Don't worry about your BHAG. Don't worry about your 10-year vision. That just guides your 3-year vision. We don't care about that. But we do care about your 3-year vision, because a successful annual goal to hit a great year, all a great year is when you nail your numbers for the current year, but in Q3 and Q4, you're on a trajectory to hit year 2. Nobody gets that. They're like, oh, it was a great year. Why? Well, we hit our numbers. Are you on track to hit numbers for next year already? Not yet. Well, then it's not a great year. We have to be heading towards our 3-year vision. And if you are, the rolling 12 will help you do that. Home stretch here. We could probably finish around an hour and 10 minutes. So 20 minutes for questions. You got them? You got 20 minutes. The monthly finance meeting is for re-examining. This is what we showed you earlier. It's diving into those numbers we just showed you, re-examining, reflecting, and then we need to reforecast. So in a monthly finance meeting, you're sitting down, you're looking at those numbers, you're looking at your forecast, you're digging into the reporting to understand what happened. What happened? You're reflecting. How did that happen? Did revenue drop? Why? What can we learn? What can we learn here? And then you reforecast. Do we need to update our forecast for the year? Don't touch your budget unless it's Q1. Do we need to reforecast? If so, reforecast. Like I said, every month we are constantly changing our forecast with real numbers. Usually we're trying to get it to go up. But we're using that forecast to keep us honest and keep the game going. So once a month, re-examine, reflect, and reforecast. And that is the 9 things. Any questions about those things first before I go into how you do it? Any questions? Or Miguel, any color you want to add to any of that? Anybody have questions about any of that stuff? Any questions at all? It's pretty self-explanatory. And I'll tell you, there's nothing more to it. I'll show you a couple of things that you can do. We have dashboards. We have some really awesome CFOs that are amazing, and they're great at predictions, and they're fantastic at comp plans, and they're great at strategy and all that kind of stuff. But you want to get to 30, 40 million and make yourself 15% EBITDA, you need these 9 reports. That's what you need, and they'll get you there. All right, we got a bunch of questions in the chat. Karina or Kristen, you want to go through them? Kristen, want to go through them?
We had a direct question from Carol. She asked if we actually do the actual versus forecast and versus budget on a monthly basis. So yes, we actually look at that monthly, and we always review it with the finance team on a monthly basis.
We do. We do. Yeah, we do. It's crazy. It's crazy. I know, certainly we're a consulting company, so I try and practice what we preach. This is probably the place I practice what we preach the most, is the finances. So we do it on a monthly basis. I'm nutty about it, honestly. You want to make a lot of money? You know, it's a great, if you ever watch the movie Citizen Kane, Citizen Kane's a great movie, and there's a great line in there. And I watched it at its point, for one of the first times, I was at a point when I was doing horrible in business. And this jackass made this comment. Have you ever seen the movie? This guy makes a comment. He says, it's not that easy to make, not that difficult to make a lot of money if all you want to do is make a lot of money. I remember hearing that. I'm like, it is difficult. I'm getting crushed right now. But the reality is it's not. It's not that difficult to make a lot of money, if that's what you want to do. You just got to be obsessive and care about doing it. You got to really watch it. I always tell our clients, money's like it's like a dog. Okay, if you have I'm sure we have a lot of dog people here. Some of you have those kind of dogs. You put the dog down, dog takes off, dog's gone. You're like, oh my God, where's the dog? Dog's gone. Like terriers. I used to have a terrier. Dog used to launch, you'd be gone for 3 hours. Some dogs, you put them down, they stay with you. Most dogs, put them down, they're gone. Money is that kind of dog. It does not stay. Money, by definition, leaves you. It does not stay. So owners are like, oh, I'm crushing the revenue. While you're crushing the revenue, your money is that dog off the leash. Your money is running out the door. So your job is to keep your money on leash. And all your people, by the way, all your employees, they are the dog. They're like, I need more money, because I'm underpaid. All your vendors, we need more money because price increases, COVID killing us. Everybody wants your money as an entrepreneur. I feel like 60% of my life is protecting people from taking money from the business. So you have to watch it monthly or it will go. And it goes quick. If you're running a big business, if you don't watch it, if you're not watching it monthly, you can really, I'm having PTSD. I got to move on. What's the next question?
I have one quick thing to add around the budget forecast actuals for the business owners. What we do in CCG is we have a monthly meeting, but we also have just a pre-meeting with the finance team. And we use that meeting to make it a little bit easier when we get together with Eric. So we look at those, specifically that report, budget forecast actuals, and we take the time during that kind of pre-meeting to actually dig into the variances. So if we're like, we were under by X amount with consulting services, we want to account for exactly why, so that when we go into that meeting with Eric and he's like, why are we under? It's just, we have a very straightforward answer, and we've kind of already done the research. So, you know, if you're thinking about owning the business and you're looking at this like, oh my gosh, there's a lot of detail for me to dig into, you might be able to kind of have some, kind of delegate some of that pre-work and that like deeper analysis to your finance team or your integrator, whoever's kind of running the business for you, so that you're able to kind of keep it high level and then focus on, I've got the information I need. Now, it's your job as, you know, the visionary to really think about what's next and reforecasting. And that's usually a better use of your time. So
Yeah, that's a great point. Great point, and thank you.
you got it.
Awesome.
And I do say why is it under? I do say that. Next, what was the next question?
How do you build key hires into the 1 year and 3 year planning?
Who asked that question?
Ryan.
Hey.
RV. All right. So it's a great question. So that's why, you know, that's why finance. So if you know, if you're probably most people are smaller businesses or medium-sized businesses. When I work with the larger companies, the CFO often largely runs the business, because CFOs tend to drive the business. CFO and COO usually end up running the business. So you look at what you think you need strategically along the different revenue targets of where that budget shows you. Okay, so in our growth system that we are just unrolling, we basically go through this. We say at certain size businesses, you actually start to require different team members at a senior level. Now that's at the senior level, the mid-management level. And then you plan those strategic hires in to your budget. If you're on the just the nuts and bolts level, I generally do it based on gross profit. So like in our finance function, I'll talk about this company, we generally know that our cost of services is usually X. So I don't bill in any of the people actually doing the work. I'll just bill that in as a service expense, and then I'll add in something for a key hire. Okay, we just hired a person to run this business, actually, the finance business, and that's a key hire. So that goes in as a salary. Then I look at it, and the next thing I figure out is, when do I need an operations person? And we had that conversation. We think we need an operations person in about, I think, 18 months from now or something like that. We map that in. And then I think, when do we need a salesperson? There's only a few functions you need. So you got to go through the functions and say, what do I need? And then we think, what else do we need? And then I think, well, we probably have to ratchet up advertising. And how much is that going to be and when? So really, I use the 3-year vision as my way to make the strategy manifest itself in numbers.
So what you're saying, Eric, is that you kind of forecast gross margin like over time, and then you build in like I know I need these key hires almost in order,
Right.
and there's a certain salary assumption for each hire.
Yeah.
So then it's a matter of working with the CFO to kind of like pick like, all right, and which quarters are going to execute that hiring process.
Yeah, and I don't want to be intimidating people that don't have these kind of teams, because I didn't for a very long time. I'll do it with my partner. I'll sit down and, honestly, my partners and I will sit down and say, what do we think's driving? What do we think we're going to need people? And I have a partner 21 years in the commercial business, and we just sit down and say, when do we think we need these hires? And we'll work with our controller and say, map this out. I cannot tell you how many times we call our controller and say, we think our vision for the next 12 months is adding a hire in this month and this month. Can you please pop those hires in and send us a report and show us what that looks like?
Mm-hmm.
We are literally gamifying all of finance. That's what we're trying to do for SMBs, so that people can have these decisions. Because what I see companies do, and they're like, well, I need a COO. I'm going to hire that person. You're $2 million. You're making 25% gross margins. You're going to hire a COO. I would not do that. I see people do it all the time. I've done it. So you don't want to hire, we have this expression, right people, right seats at the right time. So your 3-year budget helps you figure out when is the right time. And I'll tell you, our CFO asked a really good question to me last week, and I was actually taken back by it. I've never heard anybody ask this question before. So you can all relate to this. And I'm going to say there's 2 answers you can give. So for team members, don't be freaked out by this. He said, Eric, oh, actually, where's Miguel? Miguel, close your ears for a second. So he said, Eric, what is our philosophy for our model? Is our model that we're going to push people as hard as we possibly can, and then we're going to make a hire? Or is our model that we're going to not push people as hard as we can and then make a hire slightly before that, before they're really pushed to the limit, make a hire a couple months beforehand and then let that person backfill into it? That's the key problem in service businesses, right? It's a major problem. Miguel, unfortunately, my answer was we're going to push them as hard as humanly possible and hire people at the end. But Miguel, this shit's fun, right? Exactly.
It is.
So a lot of companies don't do that. So, it's interesting as your company scale, especially service businesses. I can't tell you, the companies they hire like 2 months before they need that hire. And I say, if you perpetually do that, we need to bake in a price increase because we can never make that gap up. Finances show you these things that when you're running your business a certain way, you can't overcome these issues that you have in your model if you do it the wrong way. If we hire a controller 2 months before we need a controller, we just blew $30,000. Gone. Like done. That decision, one person. So you're about making these decisions and that timing is crucial. It's crucial. Yeah. I wish I all knew all this stuff a long time ago, but happy. Other questions in the chat?
Another one from Ryan. Do you pay attention to labor efficiency, i.e. gross profit divided by labor dollars? That's
a great question. So labor efficiency, now we're getting into a little more complex. Labor efficiency is a little different. Who here uses LE? You guys, anybody here use labor efficiency? Some people do. Kristen kinda. Okay.
Kristen
does.
A
lot of companies, I won't go dwell on this because you're not using it. Labor efficiency is basically how efficient are you with how much productivity is your labor giving you. I have companies that I work with that run their company off LE. And in fact, it helps because it helps service businesses often to really, it sometimes is more meaningful to them than gross profit. Gross profit's a finance expression, labor efficiency. Sometimes service companies and directors want to use that instead as a term. So it's really similar. Really my answer to your question is you use the LE when it fits in your model. I use gross profit. Over time, I could see us switching to LE actually. It's just different terminology and it measures a little slightly different things. But ultimately, I care more about gross profit, honestly, because gross profit is really the ultimate thing that all leads to. And it's also simpler. So I'll tell you, Ryan, companies that are getting the $20, $30 million plus range, they're all over LE.
Okay.
All over it. They have to be. When you talk about business models, by the way, a lot of you heard the expression about business models and what people are like, what does that mean? Business models means a lot about your business. And I work with companies that models that doesn't work. That really net it all out. What we're really saying is your gross profit doesn't work. It's really what we're saying, ultimately. There's a lot of things around modeling, but ultimately gross profit is your model. And if you're sustaining, I work with a company right now, this is, and they're not here, so thank goodness. But I work with a company right now that their gross margins are 12% too low. And this company's been in business for a long time. And the owners keep saying, we need to grow sales, we need to grow sales. And I said, I finally put my foot down and said, I don't want us to focus on growing sales anymore. We are putting too much into an engine that's not putting out enough gross profit. I want us to fix it. And we have a massive pricing strategy campaign going on right now. It's just not worth it. If you can't get if your business is not hitting the prescribed gross margins, it's not worth it. Too much effort. Other questions in the chat?
One last question from Pauline. Where do we find someone who can extract info from our accounting system to populate the templates that we've shown? Our accounting system is based on SQL.
Okay. Send us an email and we will help you do that. No charge. Just send us an email. We'll get somebody to do it for you. We'll help you do it. All right. Let's go on. Any other questions yet? All right. Your finance dream team. So then I'm going to show you this because it helps you figure out how to do this stuff. And also, I cannot tell you how many companies I've worked with, and I can't tell you how many times that I've hired ahead of where I should be too much. And even now, I'm like, people are trying to hire us. They're like, I need a CFO for 40 hours a week. I'm like, what are you, like $100 million commodity company? You don't need that. You just don't. So I'm going to go through what we think you need, and then you can kind of use these lessons. And we have it down to dollars and how much it costs and everything. So this is what we're going to tell you. We're going to show it to you. So right now, quick poll first. Who runs your finance function today? 1. a team member who's a finance expert. Team member who's a finance expert. 2, a team member who's not a finance expert. 3, outsourced or fractional resource. 4, me. Now, of course, me could fall into one of the top categories too. 5, nobody. Nobody. Please don't say nobody. Me, look at me. The me's are coming in hot. Outsourced, 27%, probably our people. 31%, team members, not an expert. 12%. Wow. Well, once again, as you know, I'm a help first person. I can say this out loud. That proves why this company's growing so fast. Nobody has finance experts running this function in their business. It's shocking. All I can tell you is I've lost millions and millions and millions and millions and millions and millions of dollars by not knowing how to do all this stuff. I would recommend you do not have to hire us. There are some great people out there. Oh, the number of people, it's growing. 32%. 32% of you don't have somebody who's a finance expert running the finance function. So 42% of you have a team member who doesn't know finance or just the wrong person in the seat, 42%. So that's costing you a fortune. So you do not need to hire us. So I'm going to tell you what you can do. 43%, numbers going up. Interesting. Okay. SMBs. Your competitors out there who are over $20 million have all this stuff. So our goal in our consulting company is to help you not get screwed by, left in the dust by them. You can have all this stuff too. Our finance function runs almost as well as a client I've worked with for 5 years is now doing $150 million in business. Ours works almost as well as theirs. There's a little more robust, but you can do it. Number one is you need to have somebody who's a bookkeeper. And there's 3 basic finance functions. The first one's a bookkeeper. And bookkeepers show you what you have. They show you what you have. They give you accurate data if they're good. I've known some bad ones, by the way. If you have a bad bookkeeper or a bad controller, fire them quickly. That's all I can tell you. Get them out quickly. They do the everyday recording of your financial data. They do weekly reconciliation of bank transactions and credit card charges, accounts payable, accounts receivable, payroll. A bookkeeper is not an expensive hire. There's a lot of places you can get them. You can get them outsourced. You can get them offshore. You can hire them. Well, these days you can't hire anybody for short money, but you can try and run an ad on Indeed. You can find all the pricing on there. I'll show you what these people make approximately in a second. Approximately, I'll give you a range. But a bookkeeper is able to input data. If you're doing it yourself, then you're doing it yourself. Sometimes you should do it yourself. The next one's a controller. The biggest issue I see is that the people don't understand the differences between a controller and a CFO. And there's a massive difference, a massive difference. So a financial controller's analysis and insight, they tell you what do our numbers mean. They say, okay, we have the numbers. Now, what do they mean? They close the books and they provide regular reporting. They analyze your financial data and identify shortfalls and gaps. Many SMBs will see significant benefits from bringing controller on board and will not need a CFO. That's the truth. You know, I will tell you, I got Miguel here, so I'll just call him out. Almost most situations that we're in, people say I need a CFO, I need a high-level person. My honest answer is usually you need Miguel. And he's awesome at what he does. He's really, really good. He knows this stuff backwards and forwards. Now, is Miguel going to tell you, your comp plans should be this, and here's where you're going? Honestly, a good controller, Miguel probably can. He's good at a lot of that stuff, but he's not a CFO. But a lot of controllers that are good, they know just enough about being a CFO that you it's good enough. It's good enough. So a lot of companies can get away with this. Okay, so that's a controller. I'll go over the costs for all this stuff in a minute. And then there's the CFOs. Your CFOs are your big horsepower people. They give you a strategic blueprint. So bookkeepers, here's what we've got. Controllers, here's what this is telling us. CFOs, here's what we should do next. Okay, that's why people usually want a CFO. But my answer is usually you don't necessarily need a CFO if you have the right reporting. That being said, I will tell you, we do have CFOs that work in people's companies for 2, 3, 4 hours a week. And that does work really well because that's a small amount of a CFO and that does work really well. So CFOs do strategic business planning. They provide high-level insight and more robust, detailed reporting. They improve the business model and drive rather than track growth targets. CFOs, when they're really good, CFOs tend to look like COOs and presidents. The really good ones drive the business. In fact, in bigger companies and multiple companies I'm working with right now, the CFO is often looked like as the heir apparent. So they're driving revenue. CFOs, good CFOs can't handle it when the business is off track. They literally lose their minds. Additional items, they are always on top of insurance research. CFOs get this stuff, man. I can't even read this stuff without getting hives. I can't handle this stuff. Vendor and new hire negotiation, expansion planning, tax and audit management. Those are dirty words in my world. But a great CFO is phenomenal at those things. Phenomenal. Insurance is a crusher for companies. We're going through a massive insurance restructuring in our companies right now. It is a pain in the butt. And our CFO is likely going to step in and do it. So CFOs do compensation plans. Controllers can do them too, but CFOs will really give you a strategic look. If I want a basic comp plan, I can talk to our controller and he'll say, here it is, and here's how it looks in your numbers, and he's pretty good. If I want to know strategically what's this mean for my future and how does this affect my margins, I go to our CFO. CFOs are phenomenal at giving you strategic answers to questions. They're phenomenal at saying, like the question I just gave you. Controllers don't usually do that. The CFO, that CFO can tell me, Eric, if we hire ahead of our numbers, it's going to affect our net profit by this % permanently. That's a CFO. That's extremely amazing data. And that's why they get paid so much money, because they usually are predicting the future and they're using your knowledge to predict the future. SMBs with aggressive growth goals who want to scale quickly are likely to see the biggest benefits from a CFO. Home stretch, financial dashboard, concise monthly view. We do this for our clients. Do you need it? It's nice. Our clients love it. And once again, more gamifying, more data, trends, love it. Do you need it? No. Is it awesome to have? Yes. It's a nice to have, not a must have. Our clients get it. If you have a CFO with us, you get it. And this gives you all that data. And it's nice to see it. And it's fun. More gamifying, more data. All this stuff here you see, I always tell our team, because they get pissed at me because they always think I'm oversimplifying their jobs. I always tell them, you're the geniuses that are in the closet. The stuff that I create is the reports so that people like me can understand this crap. This is the stuff they're doing in the closet. CFOs, controllers like Miguel, he can give you so much data to make your head spin. Okay. I just try and take a report to say, all right, Mr. Entrepreneur who can't breathe, you're so stressed, look at these numbers. But we always have this data. Our team always has this data in the background. So here's your question, last couple slides, controller versus CFO. You consider, this is the question, company size, company budget, how aggressive growth goals are, and the finance background of the business owner. We work with some really sharp business owners, and sometimes they'll say, I think I need this, and I'll say, yeah, I don't think so. I think you've got it covered, you're sharp. So if they're sharp, most owners though can't cheat themselves into being CFOs. CFOs is tough. Controller ain't easy either. You got to be really good to match a controller. Controller is a trade. Like Miguel's he knows what he's doing. So to cheat your way into controller, though, I've seen some really sharp business people be able to kind of pull that off. CFO is not going to happen, unless you're, of course, you're a CFO. Fractional or full time. Here's what you're looking at. Salary ranges for full. Here's where it is. Okay, CFOs make up to 300 grand a year. If you're hiring a CFO and they're making 150, 160. You're probably not getting the same horsepower you think that you want to get, honestly. You're probably not. And a lot of it's about cash. You know, your CFOs are up to 300 grand a year. And if they're running a bigger business, they're going to want more and they're going to get equity share or profit sharing. And that's okay. Our philosophy is generally pay your top people as much as possible, much as the business can handle, give them bonuses and make them smile, because you want to reward smart people. Controllers make up to 150 a year. Now this is bonuses, this is all in, this is all that stuff. But that's what you can expect to expend on the top end. And bookkeepers can make up to 60. That is really on the high end. Like you can get bookkeepers now 40 to 50 also. But you know, these are numbers. We don't usually screw around comp, honestly. We try and get people to get at least start at a high level so they can work towards these numbers. We want people to be making more than normal, because especially in these roles, you can't screw around with these positions. Your fringe benefits, additional 10, 30% employee salary. And here's your rule of thumb. So I get this question a lot, and we have a couple clients who are beyond this. If you need 3 days a week, I'd go with a full-time resource, because that's where the financial model doesn't work out for you. We have clients that hire our CFOs for 4 days a week, and you can do it, and it makes them comfortable. They're happy, they like it. I tell them, like, you could do this for less if you wanted to, but they like it and they get it. But for me, I'm telling you, I would go with 3 days a week. If it's 2 days a week, I'd go outsource. 3 days a week, I'd go internal. Finance services. So this is us. I'm gonna wrap this up because this is like more of a commercial. So this is quick. We have a dedicated team, fractional CFOs, controllers, bookkeepers. We do all this stuff. I just showed you how we run it. You can do all this stuff on your own. We have the support you need. We work in combination with your company's needs, and we do all this stuff, and we are fully integrated. We take our proven process. What we just showed you is what our clients buy. They buy that, and then we figure out they need CFOs, controllers, and bookkeepers. We try and make it as economic as possible for them, and we do it in all ranges. We have people on this call right now that have CFOs for a couple hours a week. That's all they can afford, and that's all they really need. Controllers, the same thing, and bookkeepers. So we have a full stack team. We come in and do that stuff. And then we do service integration. They come in and work with they also work with our consultants. So our consultants, people hire us as a consultant. They get all the services. So our consulting thing integrates with this. And I should also tell you, if you're running quarterly meetings or annual meetings, you're running EOS, or you're running scaling up, or you're running your own quarterly meetings, we integrate with all those systems because we know that those things are, they require all that. All right. I'll ask questions in a second, but just to make sure you get next steps, you'll receive a webinar recording and list of finance tools via email. And there's a very nice looking picture of Miguel. There you go, Miguel. That's a good looking picture of you. You look extremely sharp in that picture. We will reach out to schedule a free assessment, identify gaps in your finance function. If you're like delete, that's no problem. You can feel free to delete, but we will help you. It is free. We are a no pressure help first company. We help companies all the time and not make any money off of it, honestly. You can also contact us. We will help you with basic questions. If you contact us, we will help you through them because it is, our goal is to help companies. So if you want basic stuff just to get you started, we'll help you. You want basic forms to get you started, we'll give you those too. You want to talk about what an engagement can look like so you can get all this stuff, we'll help you with that too. See if I got anything else here. Yeah, nothing. All right, questions. Anybody have any questions about that stuff? Any questions at all? Other questions? Green, is there anything else to share? All right, I got multiple questions. Kurt, go ahead.
I didn't hear you talk about taxes a lot in that. How do you approach tax planning in your budgeting and forecasts and things, or do you leave that as a completely separate matter?
Now I'm actually sweating and I have some hives going on.
I knew it.
I try not to pay them, honestly. That's my answer. If I can get around it. Now, so that's a fantastic question. So you're looking CFO level there, controller level too. Miguel can help with that, but really CFO and honestly CPA. So it's funny, I get that question, and Kristen, we should probably at some point actually add that, not as a service, but as a bullet point. What I often forget is I have a CPA I've worked with for 25 years now. It's probably my most trusted business advisor. Our CPA is expensive, honestly, but he's extremely good at what he does. I have been in scrapes of all kinds with the governments of all shapes, sizes, and forms, especially around the IRS and all that stuff. We've been audited for years and all that stuff and blah, blah, blah. My answer to you that question is you need to work with the CPA who is on the aggressive side. We can give you recommendations. I got Mohammed Marola here. We got to work with some great companies we can refer you that won't break the bank. But what I will tell you is you need to work with a CPA who is maximizing the way you do things.
Can I dive into that a little bit further?
Yeah, absolutely.
So how much does your CPA know about, the operation of your business to be able to speak to how your expenses and plans will affect taxes in the future?
Okay, so these are good questions. So one, my CPA, I'm gonna go backwards. You have to find a CPA that you feel actually cares about you and your business. You have to. And I would do it through a recommendation or referral. And if you think they don't care about you, get rid of them. You must fire quickly on CPAs. But when you find the right CPA, they literally, my CPA knows my business is like the back of his hand. He's calling me in advance for all tax saving situations. There are tax saving things going on. We try and watch them to send out to all you guys as much as we can. There's a big tax credit I just learned about going on right now. If you missed it, I think I'm trying to research it right now to get it out to you. Our CPA, you need a CPA who's watching that stuff and knows your business. So you need to explain your business model and make sure that they get it. But I will say this, and this is important. This is actually really important to understand this because even CPAs don't know this, and mine doesn't know it either. CPAs, and I'm not saying the CFOs that are CPAs. Our CFO, one of our CFOs is a CPA, but CPAs, standalone CPAs, are not finance people, and you must understand that. They will take your stuff and put it in some format and give it to you and submit that to the IRS, and you will be like, what is that shit that you just submitted? You will have no idea what that even means. You cannot take your CPAs, I would not let them drive how you set up your chart of accounts. I would not let them drive how you run your company. I would not let them give you, I always take their business advice with a grain of salt. They generally do not know how to run a business. And I say that, my CPA is my most trusted advisor. He's phenomenal at taxes. He's phenomenal at making sure we save money. He does not know how to run my kind of business. He's great at this kind of business. So you got to be really careful. If you start thinking your CPA is your CFO, you're going to have a problem. So find somebody you trust. If you need somebody to trust, call us and we'll refer you to somebody. Another question somewhere. Go ahead.
I'd like to add something, and very important when we're talking about CPAs, like Eric said, there's a general category of CPAs that will do general things, but important you get a referral and make sure that the CPA is a tax expert, because if he doesn't have that expertise, it's definitely not going to help you to get you to that tax planning that you're looking for. So I think that's critical and very important that when you get that referral, make sure that that referral comes from a really good tax background. Otherwise, you're going to be in the same situation.
Yeah. And understand right now, guys, and I don't judge it. I get it. I understand it. For better or worse, maybe it's the right thing, maybe it's not. You are the government's current tax plan. They're a small business right now. This is the target for financing. Mm-hmm. If you're making over $300 or $400 a year, you are the person that's going to fund the future. That is the current administration's plan. We've been watching administrative tax policy. Mohammed Marola, our wealth people, help out with that. We've been watching tax policy for the last year. We've been making decisions based on what we thought administrations were going to do for the past year. You got to watch that stuff. I will tell you, your CPA's job, your number one job, is to save you taxes. That is their number one job in a legal way. And I prefer personally, and everybody has their own different appetites, I prefer aggressive but legal. Because often you can get audited too. You can get audited and you want to have somebody who's going to be who's going to stand up for you and really fight the government. And that's the situation. So find somebody you trust who's really going to be in your corner. It's gonna, yeah, I'm glad you asked that question because I always forget that function because it is literally, he is like my left hand.
Can I just ask one more follow-up on that quickly, Eric? So do you have a set quarterly or monthly? I mean, you talked about the monthly finance meeting being important, obviously, but how does that? Do you have a regular communication structure with the
That's CPA? A great question. So I talk to my CPA regularly. I do not have a regular function set up. A lot of CPAs like to do that, and especially if you don't have a lot of this, then you should do that. The only thing, once again, I'd be somewhat weary about is that they don't all know how to run businesses. And you can't confuse tax planning and CPA stuff with finances. So, but a lot of them do. Like our CFO is a CPA. He could do it hands down. He's phenomenal. So if you can find a CPA who can do it, you're great. So, and then I would do some of this stuff with your CPA if they have that. But if they're just a standard CPA who's never run a business, you might struggle. Doesn't mean they can't be your CPA. It just means you gotta be careful of some of that feedback. Okay. So I would have a cadence with them.
Thank you.
All right, and another hand up here. What's the other hand? Somebody else had their hand up. No? Anything else in the chat? Any more questions?
Nothing else in the chat.
Okay. Finance function is it's fun. It's where you should live. You should spend a lot of your time there, stare at it. It's like I said, we're a consulting business. Finances drive our consulting process. So if you're looking at it, if you're a dreamer, and I love entrepreneurs that are dreamers, I'm a dreamer. Finances are what keeps you grounded. Finance is actually what enable you to hit your dreams. Don't be afraid of them, because that's if you lean into finances, that's how you do what you want to do. That's the mechanism. So lean into it. And I was telling Pauline's a fantastic client of ours. She's on the screen. I was telling her earlier before everybody joined. Number one killer of all companies is ego. Number one, leadership teams, companies, ego and agenda. One of the biggest reasons the companies don't get healthy earlier with finances is because they're embarrassed. So and that's one of the reasons I didn't. I was so screwed up. I was embarrassed. I was like, oh my God, I can't let anybody else see this. This is humiliating. That is when you need to get help. Get rid of your pride. You're making no money right now. Stop making no money. Figure out how to fix it and call somebody. Call us. You can feel at home with me. You probably didn't make no money as bad as I made no money. So you'll feel better by talking to me. So you need to find somebody who's going to understand that, and you need to rub your nose in a little bit, and you're going to be just fine. All right, we're done. I hope it was helpful. If you have questions, you need to reach out and ask us questions. We're going to feel bad if you don't reach out to ask questions that we can answer for free. We feel bad. Our goal is to help you get to where you want to go, so you don't deal with some of the crap I have. Call us, reach out to us. We're grateful. I'm very humbled that you listened and we're here and listening, and hope you have a great weekend. Bye, everybody. Thanks so
Eric.
much.
Appreciate it.
Bye.
Thank you.
Thanks, everyone.